Gold just did something it has almost never done in history. In one 12-month stretch this year, its price climbed more than 90%. 90%. From a rock, a shiny metal that pays you no interest, no dividend, nothing, just sits in a vault. And right now it's sitting near $4,400 an ounce, close to the highest price ever recorded. So what does the smart money know that you don't? Today, I'm giving you the 5 real reasons gold is exploding right now. And number 1 is the one almost nobody on TV talks about. It's the quiet move that central banks are making with your currency behind the scenes. Stick around, because once you see it, you can't unsee it. Here's why this matters to you. Whether you own gold or not, the price of gold is a signal. It's the world's oldest fear gauge and its oldest form of money. When it moves this hard, it's telling you something about the dollar in your pocket, about inflation, and about where big institutions are hiding their cash. So here are the 5 reasons gold is on the trend right now, counting down to the biggest one. Number 5, cheaper money is on the way. For years, the knock on gold was simple. It pays you nothing. Why hold a metal when a savings account or a bond pays you interest? But that math flips when interest rates fall. Markets now expect the US Federal Reserve to cut rates, and traders are betting the next Fed chair will push rates even lower. At the same time, the US dollar has weakened. And here's the key. Because gold is priced in dollars all over the world, a weaker dollar makes gold cheaper for buyers everywhere, from India to Germany. Lower rates, weaker dollar, that's rocket fuel for gold, and it's just the warm-up. But this next one hits closer to home. Number 4, the world feels dangerous, and gold is the panic button. Trade wars, tariffs, political shocks that seem to land every other week. When investors get scared, they don't ask what pays the most interest. They ask what won't collapse. And for 5,000 years, the answer has been gold. It doesn't default. It doesn't go bankrupt. No government can print more of it overnight. So every headline about tariffs or conflict sends another wave of money running into gold. It's not excitement buying it, it's fear. And lately, there's been plenty of fear to go around. Now it gets interesting. Number 3, regular investors are stampeding back in. For a while, big everyday investors sat this rally out. Not anymore. Gold ETFs. Those are simple funds that let you own gold through the stock market, pulled in around $11 billion in just the first part of 2026. In a single recent quarter, funds added over 200 tons of gold. That's the strongest buying we've seen in years. And here's why that's a big deal. This money tends to chase momentum. The higher gold climbs, the more people pile in, which pushes it higher still. It's a snowball, and the snowball is rolling. But this next one is even bigger, because it's the people whose entire job is predicting prices. Number 2, Wall Street keeps raising its targets. When gold was climbing, the big banks didn't call the top. They did the opposite. They kept moving the finish line higher. Bank of America lifted its 2026 gold target to $5,000 an ounce. Morgan Stanley laid out a path toward roughly 5,200. Now, big honest warning here. These are forecasts, not facts. Analysts get it wrong all the time, and gold has already had sharp dips this year. But when the most powerful banks on earth are all pointing in the same direction, that view alone pulls even more money into the trade, which brings us to the reason behind all of it. Number 1, the reason almost nobody is telling you. Central banks, the institutions that literally create money, are quietly dumping their own currencies and buying gold at a record pace. In just 1/4 of 2026, central banks bought around 289 tons of gold. That's a record, up more than 60% from the year before. And here's the part that should stop you cold. They kept buying even while the price was falling. Think about that. Normal buyers wait for a dip and get scared when prices drop. These buyers didn't care. They wanted the gold regardless of the price. On top of that, entire countries that had never bought gold before are now stepping into the market for the first time. There's a name for this quiet shift. It's called de-dollarization, moving national savings out of dollars and into something no single government controls. The people who print the money are trading it for metal, and when the folks who make the currency start protecting themselves against that same currency, that tells you exactly why gold is on the trend right now. So there it is. Gold isn't just a shiny rock having a lucky year. It's rising because money is getting cheaper, the world feels risky, investors are chasing the move, Wall Street keeps raising its targets, and underneath all of it, the most powerful financial institutions on the planet are quietly swapping their currencies for gold. That's the smart money move behind the headlines, not hype, a hedge. Now, one fair warning before you go. Gold is not a magic escalator. It's already had sharp drops this year, and forecasts can be flat out wrong. Never bet money you can't afford to lose on any single trade. I'm not a financial advisor, and this isn't financial advice, it's information, so you can decide for yourself. If this opened your eyes, stay tuned to watch our next video on whether it's already too late to buy gold, or if the real move is just getting started. Like, share, subscribe, and don't forget to hit that notification bell.